Hi there, Sean Kevlin here with Triple I. We are doing another executive exchange. And with this episode, we're fortunate enough to have one of our member companies join us, Kerri Hamm. She's the EVP, Head of Cyber Underwriting, Client Solutions, Business Development at Munich Re US. Kerri, welcome so much, and thank you for joining us.
Thank you so much, Sean, for having me. Really excited to be here.
Yeah, so this is another program where Triple I and Munich Re have partnered up on a survey. Risk Scan 2024 was this survey for this year. Talk to me a little bit, Kerri, from your perspective. What was the impetus to develop the Risk Scan survey?
So, great question. As soon as I heard about this, I thought it was a really cool idea. And I get very excited when we have a chance to be in our customers' shoes. So, to really understand what our consumers, what small business owners, middle market risk managers, and even for me as a reinsurer, my customer many times is the insurance company. And of course, we also included agents and brokers in that mix. It is really neat to walk a mile in their shoes to really understand how they're feeling about a broad range of issues, from what are their most important risks to how do they feel about the cost of insurance, and how do they feel about the economic environment. So my thought around that is that when we really understand what our customers want, we can design a better product, and we can maybe think about what coverages we're providing, whether they're meaningful for the client or not. And that can also help to match pricing a little bit better to their expectation. So I thought it was a cool idea. Really happy to be involved.
No, it's a great synergy, really, the two of us working together, Munich Re and Triple I, because at Triple I, we also focus on a broad audience. So we focus on the industry professional, the consumer, the public policymaker, and the media. And these surveys that we've been doing with you for the last couple of years have really drawn a lot of good attention. So it's a mutual benefit for us to be working together on this. And one of the things for that broader audience set, where, from your mind, did you see what were the top three perceived risks that came out of Risk Scan?
So I thought it was very interesting in this survey that the top three risks were really broadly shared across the spectrum of folks who responded to the survey. So that would be climate risks, from a consumer perspective, and then for a more educated audience like the broker, the insurer, risk managers, that came across as climate. So that was one. Economic inflation certainly has been on the mind of everyone. People buying eggs at the supermarket, buying supplies to rebuild after a storm, and trying to get the right rates for the insurance products. So inflation definitely top of mind. And then finally, cyber risk. I mean, how can you not have cyber risk at the top of your list? At least for me, anytime I open a Wall Street Journal or get alerts from my New York Times app, there's always something that has to do with a cyber hack or some sort of event that has happened. And we're all so interconnected these days that certainly cyber risk is very top of mind.
No, you're right. I mean, these are things too that Triple I is talking about every day. I think on the economic inflation part of it, our forecasts are showing that we're getting back to levels that are in a better place. It's never going to deflate as much as it inflated through COVID, but certainly that. And yet, you're absolutely right about the cyber incidents. It's our most growing line of business in insurance right now because the incidents are just getting more and more every day, but they're getting bigger in costs. But if I could, I wanted to dive down on the climate and natural catastrophes one with you. Because what we're seeing at Triple I when we're looking at, and I think it's probably too early to call it a trend, but definitely we've seen some different types of years and events. Last year, we set a record with $28 billion plus events, but arguably we didn't have much of any headline catastrophes, big hurricanes and wildfires and things like that. Seeing a little bit of a different trend there. We started seeing inland flooding coming along with hurricanes instead of, shore storm surges. Can you talk a little bit about what came out of risk scan in terms of these different types of years that we're seeing related to climate and natural catastrophes?
Yeah, so I think there's a couple of different answers to that. If we look first at coastal exposure, so certainly the hurricane season predicted for 2024 was expected to be active, and it actually was pretty active with landfalling hurricanes. What's interesting is that a couple of those hurricanes, while the damage itself to the coast of Florida was, kind of, I hate to say run of the mill, but it was an expected type of damage.
Yep.
But then those storms actually moved up through the U.S. and ended up dumping a tremendous amount of water in Canada, causing essentially a second catastrophe event that wasn't a hurricane but was related to the original storm. And we think about some of the patterns over the recent, say, 5 to 7 years, where we've in fact seen a hurricane, but then it becomes a second event. It travels and dumps a ton of water, or spawns tornadoes, that in many cases have added a tremendous amount of dollars to that event, but they're no longer hurricanes. So that's really interesting and not something that's captured very well in our current modeling practices. Kind of a second component of that is that I think more Americans are being touched by what we're calling secondary perils or small cat events. These severe convective storms, straight line wind, hail, wildfire, what we call pluvial flooding, or basically like flash flooding from rain events, right? These are events that potentially and arguably are related to climate change. As you mentioned, we don't have a direct link, but we think that they could be related to climate change.
Yeah, absolutely. And I think, your point about these, the inland flooding even that's being caused by hurricanes is really exposing the significant gap we still have around flood insurance. And I think you and I both agree
Totally.
that some of this solution comes down to getting more private market flood insurance offered in the U.S. is going to be more
Totally.
helpful to that problem that's growing. But Kerri, I'm going to
Certainly.
shift a little bit, and this is the part where you get to ask me a question.
So, Sean, when I was reading through the results, I was pretty impressed with the survey respondents from, again, insurers, agents, brokers, middle market and small business insurance buyers, as well as consumers, kind of identified inflation as well as increasing natural disasters as things that are increasing or resulting in rises of the cost of insurance. But I was a little surprised that legal system abuse wasn't as widely accepted as driving the cost of insurance up, when clearly it does have an impact. Can you comment on that? Maybe perhaps reasons why the consumer is not, and business owners are not readily identifying that as a driver? And then maybe secondly, what could we do about that as the insurance industry?
Well, you're absolutely right. And in fact, research that we've done outside of the survey that we're talking about today with the Insurance Research Council from a few years ago, we looked at this and we asked questions to the survey participants, asking them if they're seeing what I think all of us are seeing, what I characterize as the billboard effect or the billboard attorneys that are everywhere. It's running rampant. Everybody is seeing it, but they also didn't make the connection of how it's impacting them. And so what we're trying to do at Triple I with this issue is make that connection. Simply said, legal system abuse increases in your insurance costs. And that is the phrase that we put up literally on a billboard in Atlanta just recently with a microsite of stoplegalsystemabuse.org. And we took to digital advertising, we took to social media, really, and then on the microsite, you could actually see the specific impact for the state of Georgia. We are trying to help those citizens understand that this is costing you. As much as you're seeing it everywhere and you might find it annoying, this way that we're beginning to allow litigation to be the first step instead of a last resort is having a high impact on it. So from Triple I's perspective, we are trying to fight fire with fire and get out there with the same techniques and tactics that we're seeing by plaintiff attorneys. And we do see that it's working. We got very high engagement on our tactics in the state.
And thank you so much for that work that you're doing in Georgia. That's my home state. I was just there last weekend, sitting in traffic, of course. And within 1 mile, we counted 7 law firm billboards. So I think the insurance industry certainly has a long way to go to compete with that strong industry lobby. But I believe in us, and I think we can educate the consumer and make a difference in their costs of insurance purchase.
That's it. We just got to start doing it more, and we're seeing a lot. We're doing a lot more at Triple I. There's a lot more coordination at the trade associations as well. So I do think much of this industry is really getting active and behind informing this discussion. And Kerri, I can't thank you enough. One, for the partnership with Munich Re on our survey. Again, another survey with great results that we can communicate about. We really appreciate your time here helping us understand really what all of those audiences are concerned with and really what they're thinking about around top issues. So I want to thank you for your time today.
Thank you so much. We love taking risk and we love partnering with Triple I.
Great. And thank you all for joining us for the Executive Exchange. We'll see you next time.